Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. It's great to be back. Today I want to talk about three things: interest rates, resources, specifically lithium and iron ore, the banks. So this week Michele Bullock delivered her first speech as RBA Governor. Just as data came in that inflation isn't coming down as fast as anticipated. So it's running at about, the underlying rate's running about 5% annually, so that's getting rid of petrol prices. But this is down from highs of 8 to 9% late last year, but it's way higher than the RBA's midpoint in their band of 2 to 3% of 2.5%. So it's well above trend. So it was a big shock to the markets. And the governor, to her credit, is not backing down. She's saying she's going to do what she has to do. Basically, interest rate rises are back on the cards. It's similar to what's happening in the US. So this is actually a positive for equities. Basically, it means the RBA is not in danger of losing credibility, which Bullock herself said. So what it does mean is that the inflation genie is not going to come out of the bottle. So inflation is being aggressively contained, and that's a big deal. But it also means that you have to pick stocks very, very carefully, because it means the cost of capital or interest rates are going to stay high for longer, which is what we've been saying. So now I want to talk about resources. So it's no accident we've been spending a lot of time on mining stocks in both small caps and in our blue chip publication in the past few weeks. While there's obvious risks here, the demand is undeniable. You just have to look at the iron ore price. And in both issues, both small caps and blue chips, we advocate buying established producers. So we look at lithium in small caps. Basically, there's been a sell-off in lithium due to declining lithium prices. The biggest hit being Liontown Resources due to corporate shenanigans, the failed bid from Albemarle. That's a story in itself we cover. A decade ago, lithium was irrelevant. People forget about this. It's a nascent industry, and that's a big deal. So it means that there's going to be some swings in shifts in momentum. But the fact is that lithium is an indelible part of the energy transition to renewables. Basically, you need somewhere to store power. Batteries are it. Lithium's the key ingredient for batteries. That's not going to change. So what we like is producers with scale, because this means that when we have these big fluctuating movements in the commodity price, these are low-cost producers. So this is where the opportunities lie when sentiment goes negative. So check out the stocks we like in this sector. Then we look at iron ore and blue chips. So this has to be the most concentrated mining sector in the world. Rio Tinto, Fortescue, BHP, Vale in Brazil, they're in pole position as low-cost producers. So it doesn't matter how many executives Fortescue goes through, they have access to quality iron ore that manufacturers need. Steel builds economies in many ways, not just in property construction, and as our analysis shows, that demand is coming from other spaces. So it's well worth a read in our blue chip report. Now we get to the banks. So this is where interest rate rises really do matter. While the banks are still delivering on the dividend front, the risk is that these interest rate rises do what the RBA actually wants, causes a real downturn in demand. So we haven't seen property prices do anything much. Unemployment's camped below 4%. This can change, and it can change very quickly, which is why we've downgraded. So read our blue chip report. So when you invest in stocks, you have to remember that whatever these swings in sentiment does, it always comes back to productive assets and what they can produce. Fundamental value is where you make money in the long term. That's my guiding light. And now for the beer. Talk about getting back to basics. This is the beer we drink around here. Resches Pilsener. Getting back to basics. So this really is the beer that we drink around here, because it originated in the Waverley Brewery in East Sydney, taken over by Tooths in 1929. Carlton United Brewery was then bought Tooths around 40 years ago. Then Carlton was bought by the South African brewer Sub Miller, which in turn merged with Anheuser-Busch InBev, which then sold Carlton to Asahi in 2020. Cheers.